Good morning, traders. It's Monday, February the 26th. Taking a look at the charts, we're going to look at the daily chart here with some cycle analysis. And if we look at the daily chart, this is the Russell 2000. And more or less what we're looking at here is the cycles are holding up in the upper range, meaning there's a longer term underlying trend moving up and continuing to trade higher. Meanwhile, shorter circles are countering it, pulling down. That's why you get this choppiness price action in cycle analysis. Now, very similar to this type of price action here is this, where more or less you have a cycle bottom, it goes into place, and there's an underlying larger term cycle that is in action here, same as over here. And shorter term cycles are all pulling down, so you end up getting potentially here we just get sideways consolidation until we see the market have that final push up. And I think here, the market shows a final squeeze higher, very similar to over here. So overall, expect the Russell 2000 to hold up and potentially have another squeeze higher near the end before it kind of tops out. And last time we saw that price action, we went into a big sell-off. Now, if we take a look over the SP 500, the daily chart here, we've got price action more or less kind of stalling out a little bit, but overall the cycles are still holding up in the upper half of the range, meaning that the price can continue to climb, very similar to over here when the cycle's stuck in the upper half of the range and just chopping around in a small way. There's naturally an upward bias. There's much more longer term cycles moving up the whole time, so you end up with this grind higher. So even though the market is kind of trading sideways here, or the cycles, I am anticipating kind of that sideways chop and slow grind, potentially higher to put in potentially a big double top later in time over here. Now, if we take a look at the Nasdaq's been kind of leading the way higher. It's very tech heavy. Cycles still show it should continue to push up, likely test these highs, and from the looks of it, feels as though it'll break out and hit new highs again. If we look at the tech sector, the XLK, which is a heavy weighting of the Nasdaq, and let me just pull up the 30-minute chart. So here on the left is the 30-minute chart. This is our trend analysis of the XLK, showing when it's green, we're in an uptrend. Then you get to neutral, you get to an oversold. You see some green area here, some fluorescent green. That's an oversold area. Then the market ended up flipping to neutral, which is orange, and then we went into red downtrend, and now we've gone back to orange. And it's as of the last trading session, has popped into green, indicating that the market is technically back into an uptrend. And technology has been leading the way for quite a while. And it's the first one to really rotate, the first sector to pop to the upside. So it looks like we got some life back in this sector, and it's clearly showing that it's the leader here, first one to pop in a bullish formation and continue to move higher. So I am expecting technology to continue to lead the way. Those big cap stocks, those big tech companies is where the money continues to flow, with the average investor dumping their money into them, hoping to see higher prices. But so that's where we are. The leading indicator has broken to the upside and moving up. Now, if we go and take a look at, let's take a look at the chart of bonds. It's up about a 0.4% this morning. This is the daily chart. You can see the cycles really starting to push to the upside here for bonds. It's been getting pretty oversold, starting to chop around. We've got elevated volume. It's usually the sign that we're getting close to a pivot area or a reversal point. The market's holding up fairly nice today. It is right at resistance. And over the next day or two, we could see a little bit of weakness or sideways action, but it's very close to having a relief pop, and could see it move up to the 147, potentially 149 fairly quickly over the next couple of weeks. So I am starting to like the idea of a relief pop in bonds here. They've been under a lot of pressure, and I think we could see a little bit of a move higher. Now on another safe haven play, utilities. We've been watching this for a little while. Utility cycles are still trading down in this lower zone. They're stuck underneath the halfway mark, meaning they're under pressure still. But you can see it looks like we've had kind of a washout low, elevated volume. We've got increased price volatility. So bulls and bears are struggling. And we've got this previous high here to kind of break and beat. But more or less, it's showing signs of a bottom here. We might see it pull back and consolidate a little bit, which you could argue could be an inverse head and shoulders. You have a shoulder, a head. We could see a little bit of a shoulder, a flat shoulder here before we start to see it pop and maybe have a relief rally that brings it up, and money flows into the safe haven as people get a little nervous with equities starting to ride up near the recent highs. Now, if we take a look at the chart of gold daily here, you can see the cycle's pointing to higher prices. It is trading at a long-term resistance. It's had a nice run up. You could argue this here is a large bull flag. If we do get some legs behind this move, we could see a pop and a break and a significant rally to the upside here. We could start to see it really break out and pop and move up to potentially this 1420 area, which would be the next resistance area. If it breaks this first blue one, we're going to see some big short covering. A lot of people buying. Should power it up to this next resistance area, which goes way back on the chart to, let's just zoom way out here. It goes way back on the chart to back over here, 2013. So a pretty significant high back there. And this will be the early signs of a major breakout for the precious metals sector. If we take a look at GDX, zoom into the short-term price action here. You can see the chart of GDX here, the gold miners cycles are showing that we got a pretty strong upward bias in price, and we should start to see gold stocks pick up speed here. If gold breaks out, these should really take off and post a pretty good rally from where we're at. We've had some pretty huge buying volume. Obviously had some news to create some of that. We faded back down to support, but overall we are at a long-term support zone around this 2150, 21 area, and the market is primed and ready for a pretty big rally in the gold miners. We'll just see if gold can get traction and start to break out, and we could see a significant rally in gold miners here going forward. Now, if we take a quick look over at crude oil, crude oil is down 0.3%. It is moving up. We've been expecting it to, if it was to break and close above the 61, 62 area, next level is going to be the 64, which pretty much it came up today and has hit. Could continue to have an upward bias here. Cycles are showing another week or so of some upward bias up to these highs here, so we could push a little higher than that. But overall, energy sector is looking bullish still with an upward bias. And if we take a look at natural gas, it's up 1% this morning. You can see natural gas here carving out a bottom with the cycle analysis. Very similar type of price action we saw over here. And it looks like it's ready to almost pop and have a nice run back up to this potentially 310 area going forward. So that's kind of where we're looking for price to go in the next little bit for different markets. And we'll take it day by day. Take care. Bye bye.